going to bring James Anderson in, who said nothing was going to happen in the precious metals in the summer, and that things would begin to get active again in the fall in September. And here's a guy who's been in the physical business for a long time that saw the seasonal trend being dull in the summer and then action picking up. Welcome back and great call, James. How are you?
Hey, Dale. I'm very good. It's good to be back. Good to hear your voice.
Yeah, good to hear yours too. So, low profit taking in metals on this recent run. Has the public participated? Have your phones been busier during this run? You're getting guys like Paul Tudor Jones, and I think Bank of America came out a few days ago and said gold is the last safe haven
Mm,
because of the
yeah.
debt that takes treasuries out of it. What are you seeing in the market here, buddy?
So I think it's validation for all the people who've
Yeah,
been stacking for so long based on the fundamental factors, pretty much since the GFC 2008. That's basically been a trend underlying in the United States of America and around the world, to be honest. But in silver, especially in the United States, it's validation that the thesis is going to start playing out, and it's starting to play out in real time. What I see is I think people who've been buying, at lower spot prices are probably pulling back. Hopefully, they've got their positions now, at least the ones who are savvy and understand why they did it in the first place. And new entrants, I don't think really going to come in until you have a situation where we go beyond 3,000 gold. It goes beyond, pulls back, and then goes beyond again, and then likely the same with silver. You got to get past 50, and it has to become support. And that'll ultimately bring in the Main Street and the institution side. But from here to there, there's some excitement to come, a lot of volatility, probably some type of deflationary nightmare in between. Um, but yeah, I mean,
China.
yeah,
Deflationary nightmare. So okay, I want to
sure.
delve into that. So deflationary nightmare. I mean, this move in the dollar has surprised me. It's had no impact
Yeah,
on the metals
yeah,
until today. That could be a sign
yeah, you're right.
of deflation. So we've had an everything bubble. Could we have an everything deflation?
Yeah, it wouldn't surprise me at some point because you have so many banks around the world that are insolvent on a mark to market basis, and they just haven't admitted it yet. And so, what's the chain reaction that kind of sets that off and sets off, some type of coordinated event around the world? And I expect it. I mean, there's the second part of the global financial crisis hasn't come yet. It's not arrived yet. It has to in order to clear the system, in order to structurally reset and turn the page from the post World War II dead super cycle into a new era. And that new era is probably more of a multi currency regime. The US dollar not being extremely dominant like it has been for the last, 20, 30, 40, 50 years. So yeah, it's still got a lot of ways to go. And these are massive tectonic plates that are moving.
Yeah.
But we're looking at something that's going to take 5, 10 years to run out and play out. And you look at the fundamentals of the United States and the Western world and how indebted they are with pensions and unfunded liabilities. I mean, inflation, like Paul Tudor Jones said yesterday on CNBC on Squawk Box. I mean, that's essentially generally how governments historically get out of this mess. They don't flat
Yeah.
out default; they just really, really debase the currencies, and that's where we are.
Okay. So what do you think? I think we're completing something, this whole big move up here.
Mm-hmm.
Can you give me a narrative on whether there's a $50 or $100 left on the upside for us to
Back,
see
yeah,
a pullback towards 2,400 or so?
yeah. I've been finger hoping and
Huh?
looking for that pullback for the last, I don't know, 3 or 4 or 5,
Month?
6 months.
Yeah.
Because my brother for the first time ever was like, yeah, I'd like to get some gold. And I'm like, oh, now you want some gold. I've
Yeah.
been
So
beating on
here's
your head about
the
gold for 10 years.
yeah, the
Um,
brother indicator. So
yeah. He
okay.
wants it. He wants it at twice the price. That's fine. Nominally twice the price. That's cool.
Yeah.
But when he says it, it perks my ears for him to say it.
Okay.
And it's
All right.
not. He's not. he's not a dum dum. He understands
No,
fundamentally why you'd own gold. But the dum dums will come later when it's $4, $5, $6,000. That's where it starts to get
stupid.
really, yeah, really stupid. I mean, I remember picking up the phone in May, April of 2011 a couple times just to be on the on the retail side on the phone and talking to the type of clientele and the type of demographics that were calling and buying at $47 spot silver in April of 2011. And these were not the brightest and sharpest tools, right? These were people who were acting on absolute emotion, and they were quick to sell when spot went back to 30 and into that interim bear in the second half 2010s. So that's just generally how manias start, and this thing has a long way to go. I've driven. I think I've driven home every time I talk to you about just how big of a bull market this is going to be. This is going to be the historic gold bull market of all time. It's going to blow 19. It'll probably blow 1980 away
80.
in terms of
Yeah.
size and scale and how many things it touches and how big of a change it makes.
Did you get anything out of the BRICS meeting that happened the other day?
Yeah.
They were talking about their currency backed
Yeah,
by
I never
gold.
do. I always find that to be more of like a clickbait thing than anything else. I mean, I to be honest, Dale, I didn't even go and look at it because it's such a no news event generally. I mean, if I hear something that has credibility, I'll go look into it further. But thus far, it seems mostly clickbait and like, oh, look at the pictures of them all being together and just the same old stuff. This has
Yeah.
been going on for 15 years now.
Hmm.
It makes me think of like the petro yuan and all the other clickbait things that we've
Oh,
seen in
yeah.
the past. And so, yeah, I mean, the BRICS are obviously they're doing a lot of things tectonically and fundamentally to change the way they trade. And there's a lot of change that's happened. China now is the world's biggest exporter, and in terms of the amount of direct yuan settlement, it's almost half of the stuff they export is in direct yuan settlement. I mean, that's gigantic compared to what it once was. So
Yeah.
there is change happening. It's just I think a lot of times people hype these things up like this BRICS week in gold is just what's going to take it up a wall. I don't buy that.
Yeah. Yields haven't bothered it yet.
No.
I've been surprised by the move in yields. When we bottomed, I thought we'd get back to 4.
Mm-hmm.
I see some resistance here, but um, could yields, if they really start to head back towards 4.75%, have some impact on price?
It's possible. That's possible. I think when you're talking about yields, that's probably the most important thing. The dollar strength relative to other currencies is usually important too, but they're not direct,
It's not, yeah.
exact. So really what's driving spot price is always murky, right? It's one of those things. It's a guessing game. That's why gold is so difficult sometimes.
Can you see a scenario where China might be forced to sell some of their gold with
No,
what's happening with their,
what I
no?
would foresee is a scenario where China declares the amount of gold that they've been importing since 1980 at some point when it fits their agenda and their timeline in terms of what they want to do on a strategic basis for the next 50 to 100 years. So
Okay.
no, China, when you look at physical gold flows and data from 1980, especially through the 2000s, they basically through the 2000s have mimicked Russia in terms of the amount and the time that they officially declared their increases, and it's right in line with Russia. So they had this plan together for 20 years. So this has been a
Okay.
long-term agenda, and they have a lot more gold than they declared. I mean, China, when you look at it on gold versus their actual sovereign reserves and stuff, I mean, it's like a single-digit percentage. It's not even close to what other major economies are. They got to get to 20, 30, 40% if they want to be, big at the gold table.
Okay. I've witnessed a few things with wars
Mm-hmm.
over my career that metals and not in this case, oil prices would go up
Mm-hmm.
into the attack.
Mm-hmm.
And that once the attack takes place, that some type of top is put in. Do you think we could get a top with a retaliatory strike by Israel on Iran?
Yeah, ultimately oil, I think is going to get cheaper versus gold over time. There could be a situation though, if the war gets acute, that oil goes up into a spike.
Yeah.
But in terms of short-term gyrations, I'm not savvy enough to sit here and give you a confident answer one way or the other.
Okay. Well, I know you are confident about this long term, the gold silver ratio. So,
Yeah.
actually, last week, um, I had to put my clown hat on because before Friday, I thought we were going to get a move
Yeah, it
to
looked
above
that way.
90.
It did look
And anyway, so I put my clown hat on. It's off now. I'm just a host now. I'm not an analyst. So tell me, you have some
yeah.
pretty good downside objectives there.
Yeah, on this move, I think, this move for silver feels like it's going to run into the 40s in spot. And that gives the potential of the spot gold silver ratio to go below 70, maybe even low 60s. If you pull back like on a long term, it would be hard for me to see it cutting through the low 60s before some type of deflationary thing kind of makes it go back up. And so, I would say the move to below 70 is pretty conservative. By the end of Q1 of next year, I would expect that that'll be the play.
Okay. So the gold silver ratio into the 50 range. So
No, no, no.
this
Into the 60s. I don't think 50s, right?
60s.
Not in this run. I think once we get deflation and then we go infinite QE globally and dollar goes into secular bear, that's when we do the crazy gold silver ratio.
Okay. So there's the weekly.
Mm-hmm.
But you'd sell rallies and stay with the gold silver ratio heading lower
Yes,
from
I
here.
would think the gold silver ratio is going to be heading lower, through Q1 of next year, barring some type of wild deflationary, thing coming out of, left field.
Where do you think the deflation could come from? Could it come from tariffs are inflationary
Yeah,
that
no,
they just go? What's your view on tariffs? Because I brought up quite a few times that I think it was Smoot Hawley or Harley
yeah,
tariffs in the 30s contributed to the depression.
yeah. The combination of factors, the 30s, the gold price that they've set was too low. It should have been about 70 an ounce, not
The,
35, right?
yeah, yeah.
And so that was one thing that continued the deflation, and yeah, these tariffs will be inflationary if they do it, right? And it's a real nightmare in terms of manufacturing and stuff and getting products and shipping out stuff. So that's going to be inflationary, and what you're doing obviously with the hope is to build more manufacturing in the United States. That's inflationary. So all roads are essentially leading to inflation, even with the deflation scares out there. The central banks proved during COVID that they're faster to respond than ever, and they come in largesse, in irresponsible fashion, handing it out to anybody who's on the inside. So I would expect to see similar. But there will be losers. There will be tons of companies, I'm sure, that go insolvent from here to there. And there's a lot of banks that have to be consolidated. And the banking system, I think, in the United States, there's like 4,500 or so thrifts
Yeah.
and banks and credit unions. And that number wouldn't surprise me to go down to two to half, by the end of the decade. So you have a situation where, they want to drive down interest rates, they want to cut rates, but you have a lot of banks that are sitting on a mark to market basis in a lot of trouble. And the FDIC knows that shitstorm's coming. And they've talked about it in meetings publicly. We have the videos of them talking about it. And, ACH is so fast now, they have to react quickly or else these companies go under and the big ones gobble them up. So my expectation is that trend doesn't end.
Okay. So, we're going to have some issues with the economy and foreclosures and
Yeah. Yeah.
do you think that the real estate market um, is going to suffer during this deflationary period? And
Yeah.
do you have a ballpark guess for when that might set in? Is it a 2025 thing?
Let me look real quick. Just I always look at the long term median house to gold, and just kind of give you a ballpark of where we are. And the problem with the chart is it's an average, not a median, but I can at least look at it real quick to give you a feel. On a log format, on like a long-term basis, like the low in 1980 got down to 100 ounces for an average price. An average price of a house is like, 450 grand right now, right? So
Yeah.
100 ounces of gold should be able to afford you that by the time this thing goes into its mania. And silver, it wouldn't surprise me at all to see 5,000 ounces or less be able to get you a $500,000 home, before this thing mania is out. It'd probably go lower than that, but I mean, timing all that stuff would be very, very difficult. But that's the trend we're at. I mean, right now it's like 15,000 ounces of silver to get you a $500,000 house. It's like how much gold? 200 ounces of gold to get you a average price house in the United States. So you're talking about tripling and doubling in real purchasing power in terms of real estate.
Are you glad you're in the mountains of Panama instead of here on the ground in the U.S. with the elections coming up
I've
here in 2 weeks?
breaking news, I've actually relocated back to where I grew up and where I'm from in Cleveland, Ohio. So,
Wow,
yeah.
welcome back to just in time for,
Yeah, just in,
for just in
just in,
time for the Civil War, James. All right, so
I,
that's interesting. Was it to be with family? I know you were
yeah,
pretty happy up there.
yeah, no,
Uh,
it was a great preview of a place that I, in the future, wouldn't mind having a second house in. But yeah,
I
it's
see.
a combination of family, my old folks and my siblings here, and
Yeah,
the community
yeah.
of people I know here, and then career wise, it makes sense at this point in stage in the bull market to be in the United States.
Okay. Well, great to have you back, James. And what do you think in this election? You want to make a prediction?
It seems like Trump. I mean, everything's
Yeah.
pointing that way. I would imagine he'll win, unless there's some type of surprise at the end. It seems it's been trending that way for about a month now. So
Yeah.
my bet would be on him, probably like a 65% bet on him.
Okay. Well, I think that the market's pricing it in.
Mm-hmm.
Strong dollar, Trump, DJT's been going up.
Mm-hmm.
So that's the way it's looking right now. Um, any uh, any other hot spots, Geo? I mean, people hardly even talk about Ukraine anymore.
No.
What?
Hopefully that gets settled at some point and they just divvy up, whatever pieces of land, and people stop dying, unnecessarily for
Yeah.
they took a good swath of land. They just need to sign on the dotted line and get it over with, and let things settle. Hopefully, no more escalations on that end. But with this Israel and Iran situation, that would be I would keep my eye there, and I'd keep my eye on Taiwan still. I mean, China at some point is going to make a move there, and that will throw a lot of things into flux. So those would
Okay.
be where I'd really focus on.
Okay. So, China making a
Yeah,
move. Okay.
yeah,
I mean, they've been rehearsing. They had a
yeah,
blockade there a
yeah.
week or two ago. Do you think
Mm-hmm.
they'll go sooner rather than later?
It wouldn't
Like,
surprise me at some point this decade. Would not surprise me at all, and it wouldn't
yeah.
surprise me at all to see us stand down.
Okay.
Yeah.
All right. So
Yeah.
James is strong back in the U.S. to
Mm-hmm.
to deal with whatever we're going to look at in a few weeks. And if people are interested in buying physical gold, best way to get a hold of you and your company, James,
Yeah,
or
the SD,
silver.
yeah, SDBullion.com. We're a top 5 retailer in the United States. So if you come to SDBullion.com, you can find pretty much all the most important bullion products there, and at reasonable prices, at competitive price points, and shipping and all that stuff is fully insured and fast. So
Okay. You also have a Substack
yeah, I
site.
do. I do. People can just sign up, so I have their email. At any point, I might start doing that at some point. But it's just a way for me to keep tabs with people, and they can give me their email, and I'll always be with them at least through the bull market if they sign up there.
Okay. And James also has a YouTube channel.
Yeah, I run the SD Bullion YouTube channel. So every week I do on Friday at the end of market trading a quick rundown, basically of what happened in the precious metals that week, and I try and curate The most important stuff that I see in my eyes, 10-15 minute video typically. So people,
Right.
either they watch it Friday night or they'll watch it Saturday morning when they're doing, financial stuff at their office, at home, or what have you. But it's got a good following, and I try and be respectful of people's time. 10 to 15 minutes, that generally gets the gist.
Yeah, look at these views.
Yeah.
Huge. All right, James. Great to talk to you again. Um, we'll be talking again in January, and we'll be looking at a brave new world together by then.
All right, Dale. It's always good talking to you, man.
All right, James Henry Anderson. Find him on X at James Henry and I've given you a few places you could find his stuff and his work. And this guy has a handle on what's happening in the physical market. Have him be, part of a resource for you, because maybe you need to own some physical and not just the paper. So that's a wrap. I may have missed a silver futures move, but I've been long and stacking from 21 and lower, James. So
Yeah, that's always keep a physical position and then trade around it. That's generally how the savvy run
yeah, and I'm not giving my address.
it.
All right. So anyway, James, thanks, buddy. My
All right, Dale.
trading warrior brother, James Anderson, everyone. Have a great day, everyone. Be back tomorrow. Don't forget to join the team in about 19 minutes on the morning edge. And that's a wrap for me. People are thanking you, James. They enjoyed your presentation. So adios, everyone. Have a great day. Don't just count your coins, count your blessings. See you tomorrow. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.